The month of January is almost at a close, and we're a couple days left of me possibly sticking on my last one trade of January. So in this video, I'm going to be covering not only Macro Monday episode 11, but I'm also going to be covering my 3 trades for January, potentially what my 4th trade could be, and also a small look at next week. Well, this week. But hope you enjoy the video. Do like, comment, share, subscribe. Don't forget to turn that notification bell on if you want to see more videos. So let's jump into the video. Right, so order of importance, we'll start at the week ahead. We'll look at what is potentially coming out in terms of data. We'll also identify some possible setups on the charts. Then I'll run through the Notion journal towards the end. So shout out to Brandon. Brandon's one of the traders in my mentorship. He showed me how to use Notion properly. More importantly, how to journal in a fine, cool method. So I'm going to be running through that today so you can start doing the same. Notion is free, so I'll put the link down below. Go to their website, create a free account, and start journaling on there today. So to run through some of the data we have this week, we have a PMI-filled week, along with the Bank of Canada and the ECB rate decisions this week as well. PMIs are survey-based data that often goes ahead and gives us a small little leading indication on how an economy's sector is doing within that respective sector, be that services, manufacturing, and so forth. So it is definitely a crucial indicator for us as traders to go and see how an economy is shaping, especially with the current conditions that we're in with rates at these levels. More importantly, what the ramifications are going to be of such high rates. So PMI is out the way. We also have the Bank of Canada scheduled to hold rates, as well as the ECB then later this week as well. But that's all the interesting stuff. Let's jump to the charts. So looking at the charts there, folks, you have the dollar index in front of you. For myself right now, I did mention this morning on my live London call. If you want to go ahead and apply to trade with me live, I'll leave the link in the description below where you can apply on our website. You can then have the opportunity to trade with us. It is application only, and it is a hand-selected few traders that I choose to trade with me. So click the link down below. Looking at dollar index, I like dollar where it is. Also, more importantly for myself right now, I got to understand that we have had this month-long worth of dollar buying. How do I know that? If you could take a look at the monthly time frame, on the open, as soon as January started, we've had over a 2% rally on the dollar. Now you may start seeing some profit taking into the FOMC. Now, I'm not going to turn into a dollar bear, but I am aware of what we've witnessed throughout the month. And I'm also aware leading into the FOMC, will there be some doubt on what the FOMC will hold? And will we see some traders reposition their portfolios ahead of the event? And personally for myself, folks, I see that being the case. Looking at dollar right now on the daily time frame, we'll stick it on the daily for now. We have had a slowdown here. We've had a nice little doji and a slowdown period there on the daily time frame. We've also had, and something I follow very, very closely, by the way, is lower swing high, lower swing high, lower swing high. So the market is failing to take out fresh new highs. By definition, this could be classed as a flag for traders that do trade on the lower time frames, trading this pattern over there. You could obviously, well, let's just go to the lower time frame. You could then trade the break of this region. There are people that do still trade flags. There's nothing wrong with trading flags. I have the magnet on, that's why. Switch the magnet off. There are still traders that do trade the flag. If you were to trade this, obviously, your best bet is to trade the break to the upside, should there be one. That would look anything along the lines of this. And all this is a continuation pattern, so that simply means you're jumping on the back of a move, should that move continue to break out further. But for myself, folks, I understand, and I'm going to run through 3 trades shortly on my journal. My new journal, by the way, quite exciting. I love journaling, I love writing things, but this is on Notion purely for showing my trades, showing the history, showing my mindset around the trades, but also for myself, right, to keep track of what I'm doing. So dollar there, massively overextended, over 2% on the month. This is now purely a festive season unwind. That's it. Nothing more, nothing less. We had this move lower over the festive period, purely hooking people in for those shorts. and we've had this massive 2% move higher. For myself, folks, I expect this correction. I expect dips to get bought possibly into the month of February once the Fed actually unwind, right? The question is, are they going to? The question is, what will the Fed's stance be on the 31st? In case you're not aware, next week on the 31st of January, we do have the highly anticipated FOMC meeting, where they are going to go ahead and possibly give us an indication of what the path looks ahead like for 2024. Now, for myself, looking at this thing on the daily, we can see that the market's losing some steam here up at the high. So for myself, I want to be possibly buying dips. The question are we actually, let's put that back. Are we actually going to see 102,700 or 102.50 anyway in that region? Are we going to see that? So looking at these legs, we had this impulsive leg. We have this consolidation on the daily. We have this impulsive leg. Are we gearing up, folks, for another very quiet week on the dollar? Are we going to have, let's draw this in for the purpose of this example. Let's go yellow. Yellow to show indecision, right? You know, you're stuck at a traffic light and it's yellow. You don't know if you should go. You don't know if you should stay. Let's clone that. Let's put that there. Could we be in line for another sideways week into FOMC tomorrow, into month end, right? Traders, markets, investors don't really know if they should be long. Should they be just sitting in the current position? Should they hold? Should they sell? Should they lock in some profits? So there's a lot of indecision right now at the moment, and that is pretty much what doji candlesticks represent on the higher time frame. Loads of consolidation on the lower time frame. So looking at that on the 4 hour, I like the price action. For the purpose of that, let's delete this. I do like the price action. I like the fact that we've broken below this low. I'd like to be buying dollar dips. Am I going to get that price now? Am I going to get that price next week? Am I going to get that price next month? Well, it is next month, next week. So I'm going to wait for it, right? I have to wait for it. That's my job, as is it yours. We are not yet to move markets, well, not yet. But at the same time, if we're not getting the prices that we want, if we're not getting the move that we want, should we force positions? Should we ruin a good month that we have had? Or we wait for the market. Wait for the market, see what it gives you, try to jump on the back of that. So that's dollar, right? I'm not going to give you all the interesting stuff, but I'm going to run through my 3 positions, and I'll also potentially run through what I'm looking out for. So this is Notion. Again, shout out Brandon. Brandon, one of the traders in my mentorship, showed me Notion. I liked what I saw. I liked that I could have embedded pages. I thought I have to have that. So Notion is free. Click the link in my description. Go ahead, go to Notion's website. You can download the app, make a free account on there. So this is January 2024. I have taken 3 positions. I've called all 3 positions live, by the way. And yeah, let's run through dollar yen. Dollar yen was my first trade of the year, and I'd like to read you what I have written here. So starting the month and the year, looking for a clean unwind of a dovish Fed post-festive period squeeze to the downside. It's sad, but it's true. Everyone turned their backs on the dollar over Christmas, right? That's the trade. That's it. Massive move. Dollar yen was trading at 141, right? We already hit the high of 148, right? So you got big move there in the month of January. I took along from 143.75, right, at the time. Look, 50 pips on dollar yen, despite knowing well and truly that this unwind could be worth more. Why just 50 pips? I want to lock in some gains, bring some blue back to the board. That is so imperative as a trader to actually just generate some gains, right? Generate some gains. Ultimately, dollar yen was trading straight into this level of resistance. If you look at that image over there, and yeah, long story short, a few sessions later, dollar yen was up 400 pips. Nothing I can control, purely the hindsight bug. What is the hindsight bug? The hindsight bug purely is that little voice in the back of your head telling you that you should have, could have, would have held. And yeah, it's not going to help you as a trader. Right? You have to focus on the very next trade. So, dollar yen, big move to the upside from initially starting the year. I expected that dollar unwind. I expected dollar yen to trade into 150. Did I expect it to happen so quick? Not a chance. Not at all. Had I obviously expected it to happen that quick, I would have held my position to 148. right? But I just took 50, a measly 50 pips out of it. But it is what it is, right? It is what it is. So, oil long. Why am I long oil? We'll read through this. The bias on oil originated from the escalations in the east. Right, I've been reiterating this. If you've been watching my videos, you will also know of what's been happening there. I'm sure you have heard it on the news. It is sad the way things are escalating, but no one likes being shot at. So there is retaliations from every side. Right, we are where we are. And right now, that is affecting the market. So if you are a trader and you are trading right now, it's imperative that you understand what the actual geopolitical situation is right now. So bias on oil mainly originated from the escalations in the east. Ongoing war in Gaza putting pressure on other Arab nations. Yemen's military group, the Houthis, which are Iran-funded and Iran-backed, have been firing at ships in the Red Sea as their form of retaliation for what is going on in Gaza from Israel. That is their form of retaliation. So looking at oil, beautiful long from 71.52. If you watched last week's Macro Monday, I did cover this, right? Would have liked to add anywhere into $73 a barrel, if anything. Not to my surprise at all how manipulated the oil market can be. And we had this move lower, right? Back again below $71 a barrel. And this massive move straight to go hit what would have been my target. So still managed to pull some gains off for that one. Looking at January. And then the SPX, I did lose a trade in this. I fat fingered this trade while I was at gym. What does fat fingered mean? Not what you think it means. But I fat fingered into the S&P 500. What does that mean? I have a midday rule on a Friday. If it is Friday at midday, I cannot enter any further positions. What do you think I went and did? Obviously, I entered short while I'm at gym and a bit pumped. I was pumped. And, oh shit. Just dropped something on my desk. But I was pumped. Gym was obviously pumped in my veins. And I fat fingered a trade on the S&P. I still like it lower, by the way, as I am overall a dollar bull. And I do feel leading up to the FOMC over the next couple of trading days, right next week, we are going to have that unwind in the value of the S&P, right? Let's try and keep that in mind. So what did I do? I had a level of 47.70. That was a level definitely discussed on my previous Macro Monday. Should the market have broken below 47.70, I'd like to get short anything above. 47.72 was my initial entry on the SP. You can see over there. And yeah, broke my rule. We had this big spike higher. S&P's rallied higher. Let's actually run through that. The S&P's actually rallied higher at the time, creating fresh high. This was ultimately the trade over there. I'd still like this at some point lower. But the only way that I'm allowed to trade this as per my rules right now as a trader is knowing well and truly that should the market crack 47.70, I'd like to get involved. Right? I'd like to get involved. But till then, gotta wait and see. But as I said, if you did wait till now, I would share a trade. I'd like to get into oil again. If we see $72 a barrel, I'd like to be involved. Right? I'd like to be involved. Looking at this then on the 1 hour time frame, structurally this trade has been ever so beautiful. If you just look at that, we did have a beautiful nice little fib continuation play there out of 73, which was actually in my notes, by the way. I can show you that. Why not? Would like to add anyway into $73 a barrel. If anything, beautiful rally into 70 or sell off into 73 and a rally from there. But looking at this week right now, looking what happened to me last week, I understand what's going on. I understand the geopolitical situations. I understand as well, by the way, we're in an awful range on oil. Big range. And I also understand how manipulated the oil market is. So if I can get an opportunity, to buy oil from $72 a barrel, I'd like to. I'd like to do that. Dollar, expecting some profit taking. We've covered that. Gold, right? Gold. I like gold. That's the trade, right? That's the trade. You've seen there. Could we have that move from there? I think so. 2050. I see this back to $2,052 an ounce. Doesn't have to be 52. It can be 2048, 2049, anywhere into the high. Right, locking gains at your own pleasure. Obviously, this is not financial advice. This is the trade I'm going to be following with my own money. So do keep that in mind, please. But folks, I'm looking to wrap up January over the next couple of days. So do keep that in mind. If you have made some profit in the month of January, don't give it back on the last stretch. Your job as a trader is to be able to lock in gains while managing your risk, while continuing to follow your plan, while becoming a better trader. Right, so please remember that. But that's it for me. Right, if you've watched till now, you're a G. Drop in the comments below what you want to see more from this channel. I'm going to do my best to bring that to you. But that's it for me. I have another video scheduled tomorrow, so look out for the channel. Turn that bell notification on. See you tomorrow. Peace out. Bye-bye.